Hey, what is happening, Bulls and Bears YouTube family? It is Saturday. What's the date today? January 29th, 2022. It's early Saturday. It's about 43 degrees. And I'm broadcasting from my garage, aka studio. And this is an unheated garage. So that's why I always have this jacket on, for those of you that were asking why I'm always wearing jackets. Probably in about March, April, that's when I'll not have to wear a jacket. No, I don't want to heat this garage. It's not insulated, and the heat would escape. And actually, our electric bill just went up here in where I'm at in San Diego. But SDG&E, our power company, is one of the highest, or the highest in California. It's about, our electricity bill is about between $200 and $225 a month during the winter. It dips a little bit in the spring, but in the summer, because it's hot where I'm at, it gets in the 90s and 100 quite frequently. Then the electricity goes back up in the summer to about 180, 220, somewhere in that range. So there you go. That's why I'm always wearing a jacket here during the winter months. Could I broadcast from one of our rooms in the house? Yeah, but it's occupied by one of my kids. Should I make my kids have the bedroom in the garage? And maybe I'll have a heated bedroom to broadcast from? I can't do that. Thanks everybody for being here. Let's talk about this article that came out, Shock and Awe. Should we be preparing for shock and awe? Now, it's not me saying this. Could shock and awe happen at any time? Absolutely. As soon as this market stops being propped up, as soon as they pull the plug, I'm sorry, I've got a pest flying around me here. As soon as they pull the plug on this money machine, this whole thing is going to come down. As soon as the 90% of the owners of the stocks, as soon as the top 10% that own 90% of stocks decide to go ahead and sell all at once, look out below, because this market could come down. I'm not saying it's going to come down. I'm just saying that at any point, this market could come down if the very people that run the markets decide it should be time to come down. All right, but let's go to this article right here, and let's see how ridiculous this is. And this came out of Bloomberg. How the Fed could decide to shock and awe with a 0.5 point hike. So now a 0.5 point hike is shock and awe. And this chart right here goes back over 20 years. So if you see my cursor to the far right here, we would be about right here at a 0.5 point. And historically, that's still in ultra low territory. But yet, the markets are so overvalued and so over-leveraged, and institutions are so over-leveraged, that a 0.5 point rate hike, we're talking about shock and awe. Now, shouldn't this be a wake-up call if a 0.5 point rate hike is going to bring on some sort of shock and awe event? And when you look back historically, first of all, we're at about a 40-year high for inflation. The last time inflation was this high in the early 80s, about 40 years ago, look at where rates were. Let's bring up a chart on this. And this is the Fed's own economic data. To the early 80s, the Fed funds rate between 12 and 14%. So early 1982, 40 years ago, back when inflation was this high. And now we're talking about just a 0.5 point rate hike is going to bring on shock and awe. So how ridiculous is this? Now, again, I want to make this clear. I'm not saying there's going to be shock and awe. There's been a few people down in the comments saying I've been predicting a crash or a plunge. I'm not predicting that. All I'm saying is when the big money, when the big boys at the top that run almost everything, not everything, but almost everything, again, 10%, the top 10% own 90% of all stocks. If they all got together and hit the sell button at once, you would see a plunge of who knows how big, 80, 90, 95%. All right, so I'm not in that group. I'm not in the top 10%. I can't tell you if they're planning on doing that or not. I'm just telling you that they have the power to do that. Also, if the money printers, the money machine, if they pulled the plug and decided no longer to support the markets, no plunge protection, no more buying securities and bonds, no more debt monetization, that would also bring the markets down. Again, I'm not saying it's going to happen. I'm just saying they have the ability to do it. So ask yourself, do you feel comfortable being all in the stock market, knowing that it's all artificial, knowing that they can just pull the plug and they could all click the sell button at any moment and bring this market to its knees? And the spectrum of opinions that I've seen on that, it varies quite widely. You have a group of people that say you have to invest, you have to be all in. It's the only way to keep up with inflation. You have other people polar opposite where they're not in at all. They don't trust it because they know the plug can be pulled at any moment. You have some people that are in but also still have cash on the sides, ready for a deflationary event. I tend to fall in kind of the balanced side. I'm not too much into stocks right now, a bit in my 401k, but I've since started moving a lot of that to bonds and hope that could blow up too. You just never know. But from what I see, if you're too scared of the risks, then it's going to be really hard to make any money in this environment. All right, but please comment down below. What do you think about the fact that we're talking about a 0.5 point rate hike, and news outlets like Bloomberg are saying that this could initiate shock and awe? That sounds pretty extreme for a 0.5 point rate hike. I wish the Fed would go ahead and just raise rates to 5, 7, 8%, bring all the markets down, bring the markets to their knees, and let's pick up the pieces and rebuild this thing with something better. But of course, nobody is going to do that. And your leaders on both sides, they're not going to do that, because then they'll be the bad guy. Why? Because most American people have no clue that this whole thing is propped up on funny money and our artificial stimulus, endless debt, QE to infinity, endless money printing, endless bank propping. So on one hand, you could sit there and blame the leaders, or you can blame the people for really not knowing how things work. And because the people don't know, if the leaders do change things and just crash the markets by raising interest rates, including the people at our friends over there at the money machine, the people will just blame them. So they're between a rock and the hard place. They can't just raise rates and crash markets because they'll get all the blame. But people like myself and a lot of people here on this channel probably just wish they would go ahead and raise rates and crash the markets and get it over with. Instead, we're sitting here guessing how much bigger the bubble is going to get. So I would rather see the market correct, get it over with, instead of sitting here continually guessing how much bigger the bubble is going to get. And again, bubbles can go bigger even right now. The housing bubble, some people say the stock market bubble. At the click of a mouse, they can bring these markets back up. They can inject liquidity into the banks, therefore allowing banks to give out even bigger mortgages than we're seeing now with the money printing. All right, so bottom line is nobody knows exactly what's going to happen. Now, speaking of dire predictions, let's talk about David Hunter. He is predicting a melt-up of another 40% from here. This is over at Wealthion. You might want to go check out the interview. It's about 40 minutes. But he's predicting a melt-up from here of 40%, so basically a vertical move on the stock indexes, followed by an 80% crash. Now, I've spoken to David Hunter via Twitter. I don't do interviews here that often. I haven't interviewed him, but he was nice enough to respond to some of my stuff over at Twitter, and I tend to agree with a lot of what he says. The pattern he's talking about is basically a blow-off top, parabolic move, and that way they shake out all the shorts. And all the people that were expecting prices to go down, they're going to push them out because prices are rising and all the shorts get scared out. Then they pull it and drop it. So that's a very familiar pattern. And we talked about that just in our past couple reports, where blow-off tops typically go parabolic. And we looked at a stock in our last episode, and we saw that happen to the stock for Robinhood at the IPO. It bulleted, almost parabolic, straight up and down move up to $70 just after the initial offering, and then ever since then it's been plummeting. It's down between $10 and $12 right now per share. So again, anything could happen. Be prepared for anything. I wouldn't take anything off the table. Expect the unexpected, as they say. And people that used to say that was too paranoid to think about things like this happening, look what's happened in the last couple of years. Would you have expected the world to go into madness like we're seeing right now? Prepare for more madness, people. Be well, big love, stay well, peace, keep stacking. Bye for now, everybody. Peace.